You definitely don't want to miss this one tonight. Celsius just made a $1.8 billion power move, and Nvidia earnings could shake the entire market. And the feds are turning up the heat on UNH. Plus, we're revealing our paper trading game plan and breaking down the latest Wilcox Fed update from our senior agent in the field. Buckle up because this week's market action is about to get wild.
Mm.
Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate scouring the market for the next call or put going up 500% or more, or a more conservative swing trader or investor, we're here to provide the latest market news and give our 2 cents. This is Ethan Harris and Brandon Shaw. Brandon, how are you tonight?
Good evening, everybody. Ethan, I am doing fabulous. It is a beautiful South Florida evening here. It is Sunday, February 23rd, and boy, oh boy, do we have a juicy episode, tons of content. I'm doing great. How about you? How was your Sunday?
Sunday was good. I woke up late. Well, not late, but like 6:30, whatever. Got Amelia up, Amelia Estevez, and then I worked out, got my squats in,
Nice. On a Sunday?
had a nice chill
What a
Sunday. Got some chores done, and yeah,
beautiful.
that's what we got going on.
Beautiful.
But let me jump into it and rock and roll. We've got our Berkshire Shareholder Meeting this weekend. So uh, this is someone that Brandon loves, and it's the Coca-Cola man. He loves his Coca-Cola.
Mr.
He
Buffett.
Mr. Buffett, yeah, Warren Buffett. He had a annual shareholder meeting. Well, rather, he had a shareholder letter, and then their shareholder meeting is scheduled for May the 3rd in Omaha, Nebraska. But Warren Buffett released his annual letter to shareholders, providing some significant insight into the company's performance and future plans. So, if we wanted to go over some of the key highlights, he has record cash reserves on hand right now. They're currently holding $334.2 billion. And that's attributed to some pretty substantial stock sales. If you've been watching his sales over the past couple of probably weeks, I'd say, they sold portions of their Apple and Bank of America holdings. And so that they're sitting on a ton of cash right now.
That was a lot of money.
Yeah. And then he confirmed that Greg Abel, who is the current vice chairman of non-insurance operations, is going to assume the role of CEO. So Warren Buffett is 94 years old. If you check him out, you'll notice that he looks it. Let's try to find this picture. Oh, I can't. Sorry, I can't do that right now. And then the thing that we were talking about before we started to record is the fact that there's no like guidance. There's no future guidance on what
Nothing.
this looks like. You know, he's got all this cash right now, but what is he doing with it? He's just sitting on it. Um, and Berkshire Hathaway paid 26.8 billion in taxes in 2024, more than any other U.S. company. He urged the government to spend tax dollars wisely and support those less fortunate. So that was very nice. He also highlighted some increased investments in 5 Japanese trading companies with plans to potentially raise Berkshire's stakes in these firms. I thought it was very interesting. These are the top 5 trading houses in Japan: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
Wow.
These
That was well done.
substantial
Better
yen.
better you and me.
And, these let's see, these investments were 1.9 billion in October alone. So he's investing very heavily in Japan, which is very interesting. And
Very.
I think it's because of the low interest rates that they're currently experiencing right now. But yeah, so he is Smaug the dragon from shoot, what is I'm losing my
You lost me.
my nerd in the Hobbit, of course, in the Hobbit.
Oh,
Um, the dragon like sitting on the pile of cash right now in
oh,
gold. Yeah,
100%. 100%.
very kawaii. Thank you, Bailey.
Yeah,
Yeah,
that is so much money to be sitting on. That's
yeah,
insane. I, for one, am my interest is piqued in the fact that he is a selling a lot of stock.
right.
That should be a red flag in my opinion. And B, the fact that he's keeping his cards close. He hasn't really told anyone in the letter why he's
Right.
doing it. He's keeping his cards close to him there. So I don't know about you, but for me, when Buffett sells, I think that is, alarm bells should go off for the market.
Yeah.
He is the classic buy the low, sell the high. He is arguably one of the greatest investors that we've ever seen. And so, yeah, when Buffett makes moves, you pay attention. So, um,
Yeah.
yeah,
And he's like your iconic value investor. So when you
iconic.
when you when you think of a value investor, if you don't know what a value investor is, it's you break it up. So it's essentially all it is an investor who really puts his cash into companies that he truly values and thinks are going to produce long-term value. So he's not somebody who's going to try to swing a trade or anything like that.
Nope.
He puts $1 down and he holds it there for at decades at this point, right? I mean, he's 94. He's been in the game for a while, so he's probably got decades of investment in Coca-Cola alone.
Yeah, Buffett is not worried about a nine exponential moving average. He's not worried about a MACD and RSI. Name your indicator. He probably doesn't know how to use it. Um, you know, he probably doesn't even know what it is.
Yeah,
So yeah, he
MACD. I
is.
got a McDonald's last night.
Yeah, that's probably what he would say. So, very much the traditional value investor, and he has been wildly successful doing
Yeah,
it. He's a very, very smart man. I have a lot of respect for him, even though his approach to the market is not mine. He is definitely someone I pay attention to just for overall macro market sentiment. When he
yeah.
makes moves, whether it's buying, holding, or selling, it should indicate something because he's got the knowledge. So
You know, I'm something of a value investor myself. I've been in GameStop for a very long time,
you
and
have,
I
yeah.
I can't sell.
You
I'm
can't
not
you can't
willing.
sell. You can't sell. And you would check off one of the boxes for a value investor because part of the reason you're in it is due to fundamentals, which is obviously a massive part of value investing. So yeah,
Yeah.
yeah.
Well, hey, that's a good transition for your next segment here, which is on United Healthcare. Uh,
Yes.
yeah, tell us a
Yes,
little bit about your.
let's dig into some United Healthcare. So United Healthcare had some unfortunate news um, late
Their
last
CEO got
week.
shot.
Yes, well, yeah, that was back in December. That definitely wasn't positive news. That was unfortunate. Yeah, so they've kind of been in the news for a while, right? So they had, their CEO, United Healthcare Group, that was gunned down in New York in early December, and that really sparked a lot of public interest in the company, their practices, why this may or may not have happened. And then basically, United Healthcare took another metaphorical shot late this past week. According to AP News, United Health Group shares tumbled Friday on a report that the U.S. Department of Justice has started an investigation into the healthcare giant's Medicare billing practices. The Wall Street Journal said federal officials have launched a civil fraud investigation into how the company records diagnosis that lead to extra payments for its Medicare Advantage or MA plans. Um, those are privately run versions of the government's Medicare coverage program, mostly
Right.
for people ages 65 and over. So the paper, citing anonymous sources, which is interesting, said the probe focused on billing practices in recent months. And it was interesting when United Health was, asked about this. They were basically like, "What? We didn't know we were being investigated." So they're kind of playing dumb here. Um, but it is definitely something that is affecting the stock. If you just look at United Healthcare as a whole, right, it's one of the largest corporations in the world, with a 457 billion market capitalization. That is massive. Um, so it's a massive company. Its business touches health technology, pharmacy benefits, and physician practices. According to the Guardian, the company is so large that one industry analyst estimated 5% of U.S. gross domestic product flowed through its infrastructure each and every single day. It's the largest employer of doctors in the U.S. with more than 90,000 physicians in 2023, or nearly 1 in 10 American doctors. So not a small company at all. And so
That's crazy. 1 in 10.
1 in 10, isn't that wild? Um, and just as a reference here, I just want to share my screen real quick for those that are on YouTube. um, you can go to companiesmarketcap.com. This is a visual representation of, the largest companies in the market. Obviously, Apple is right at the top there, currently sitting at $3.688 trillion. But if you scroll down here, United Health right there, number 21. So this is a massive company. Um, so it's going to be really interesting to see what comes of this investigation, and how it's going to, affect the stock, right? Because that's really what we care about is, how is it impacting a potential trade, or what is going to be the outlook. um, as of right now, United Health Group is, well, as of Friday, it was trading at $466.62 at the close. But uh, it is extremely over sold, I would say. If you take a look at the screen here, this is a chart of it, United Health, over the past year. And obviously, you can tell just by looking at the chart, we had this massive drop off on Friday on a ton of volume due to that news. If you look down here, this is what we call the RSI. It's a momentum indicator. Anything below 30 is oversold, anything above 70 is overbought. And as you can tell here, this stock currently is sitting at oversold. Obviously, that federal probe is negative news and causing a lot of people to sell this. Um, but it's going to have a massive impact on that entire industry. I think we can see a lot of other related companies to United Health get negatively impacted by this. So it's really become a drag on the market. But I'll be curious to kind of see what comes of this over the next couple months. Obviously, these kinds of investigations are not quick. We're not going to have all the answers tomorrow. But if they were, in fact, doing some nefarious things with their billing practices, I mean, how much further could this go? Is this going to make a new, 52-week low? What's going to happen? Definitely an interesting story, especially again with the assassination that happened in early December. This company has been in the spotlight for a little bit now over the past quarter. So I'll be curious to see what comes of it. Yeah. Any thoughts on United Healthcare, Ethan?
I was actually thinking about insurance. I think it was, I was just thinking about insurance the other day. but I was thinking of the racket that it is, and just how um, ingenious it was to require employers to provide it. So your employer, I mean, on the back end, your employer is already like on the hook for purchasing these insurance plans, and so like no matter what, the insurance companies are going to be making dosh, because they're, companies have to front load the insurance. But yeah, Brandon West has a theory that Wilcox is actually the real shooter, and I do not bring Michael Wilcox's name into this.
He's too
He is our
stressed out
senior agent
already.
in the field. he
He
he is a stable, somewhat stable individual, but he has the
somewhat.
heart. Yeah, he has the heart of a gentle giant. He would never attempt assassination on anyone. He just follows Jerome Powell into the restrooms wherever he goes, and
Wherever he goes.
he picks his trash out of trash cans. But that's not murder.
The only thing Michael Wilcox takes his anger out on is a fax machine. So, but it's I don't know, and I haven't even been keeping up with what's been going on with that trial. I don't know if you have, with the murder of the CEO, like where they're at with all that. Um, I gotta get up to date on that. But yeah, with the billing practices, I mean, that is sketch, man. A lot of people were already thinking that like there were some nefarious things going on, and oh, this guy deserved it, this and that. So I don't think he deserved to be murdered at all. But I do think it's interesting and coincidental that that happened, and now the Fed is kind of digging in here. So I don't know. We'll see what comes of it.
Yeah. Well, while you were looking to see what some market plays look like, why don't you introduce us to our next tool? This is a tool that we both are somewhat familiar with, but we think it's pretty cool, and just wanted to introduce it. And we're going to start using it for some of our uh, research and analysis and whatnot on our plays, and it's Swaggy stocks.
Swaggy Stocks. So, very interesting website. They use a lot of different analytics to track a bunch of different things, right? So, basically, on Swaggy Stocks, you can get a rundown of Wall Street bets, real time sentiment, ticker sentiment for certain stocks. They have a stocks list for Wall Street bets. And it's just a really cool website, can save you a lot of time for certain types of social sentiment, right? That's kind of been the big thing over the past, I would argue, 4 years now, 5 years, right? Is getting trade ideas from social sentiment and what's hot. And this is just a way that you can build a trade idea. They have a tab for unusual options activity, social sentiment, top SPACs, hot penny stocks, short squeezes, all the above, right? So this is something we're definitely going to plan on using for the long haul here on Stonkcast. I think it's a beautiful website. Love what they do. And one of the things that I wanted to get into tonight is the short squeeze list, right? One of the things, if you're not aware, obviously you can buy stocks in the stock market, but you can also short stocks in the stock market, right? So just a brief description of what that is. Basically, instead of buying a company's stock, if you have a margin account, what you can actually do is short it. So you're betting on the company going down. You're betting on the stock price rather going down. And so obviously, if buy low, sell high is still how you make money, regardless of what direction you're in. If you're shorting a stock, the idea, of course, is you're going to sell it at a higher price than what you buy it back for, and you keep the difference. Obviously, there's some fees associated with that as well. But playing with short interest stocks is a dangerous game, as they are highly volatile and risky, as Swaggy Stocks beautifully describes here. You should also remember that if a large fund is heavily short a company, that they have done their extensive due diligence, right? So there's a reason that companies are getting shorted. It's not because they're doing good. It's because these giant hedge funds, these giant investment firms have done their due diligence, and they're basically saying based off financials similar to Nikola, which we covered in a previous episode, hey, this company is going in the gutter. They're going to declare bankruptcy. It's not a good company. Um, so you can short stocks, right? Now, basically, when it comes to shorting stocks, one of the interesting things is when unexpected news comes in the positive. Fundamentals for the company change, things are turning around. What ends up happening for those shorts, because their losses can be infinite, they need to buy back those shares to get out of their positions. And so when you have buying interest already from people who are long, in addition to shorts covering, you get what's called a short squeeze. And
Uh,
it's based on liquidity of shares available for trade. So in order for a short to buy back their shares, they need liquidity. So if you have the perfect storm, I think you'd probably agree with this, Ethan, would be a company who's heavily short. Positive fundamental news comes out of nowhere, and the trading volume is already below average. It's a low liquidity environments. What that does is it creates a buying frenzy. There's not a lot of liquidity, and price can get violently pushed up quickly. Is that fair to say?
yeah, we witnessed it. Me and Brandon were in the trenches witnessing it live as it was happening.
Yep. Yep. So, Ethan and I have been well versed in short squeezes with GameStop and AMC, respectively. And, we've seen both the good and the bad with those. I've seen a
And
lot of
Brandon.
other. I've seen a lot of other short squeezes play out over the past 4 years that have not been successful. So they're definitely risky plays, right? But here on Swaggy Stocks, the reason we're mentioning this is because here you can have a quick view, a sentiment list for short squeeze. These are going to be, they're basically pulling data from a lot of different social sites, whether it be Reddit, X, other spots, and basically just pulling out the mentions of various companies that have notable high short interest. And so, why is that important? Well, it's important because if a company is highly shorted and there's a lot of eyes on it already that think it's going to get short, they're obviously buying it. And so it can be the potential beginning of a short squeeze, right? So one of the notable stocks here that's had news recently is Celsius. CELH is the ticker here. And this is one of the stocks that Swaggy Stocks currently has on their short squeeze list as trending. So this particular stock just dropped earnings on Thursday. According to Barron's.com, Celsius stock soars. Earnings and acquisition news are fueling a big rally. Celsius Holdings stock jumped 36% after the company posted quarterly earnings and sales that came ahead of Wall Street expectations and announced an acquisition deal that could rekindle its growth. So they basically acquired a rival energy drink company to the tune of 1.8 billion. And so obviously that's positive news. A dying company does not buy out other companies. So they obviously got cash, they got
At least not
stock
a
from
smart
this.
one.
Yeah, what?
At least not a smart one.
At least not a smart one, exactly. Um, so I think Celsius is a smart company. They're all over social media. They've been growing. I see them everywhere. People with Celsius in their hand all the time. So they're definitely making moves. So that was the
They
positive news for the company. Yeah, go ahead.
they also they didn't just buy anyone though. They bought Alani Nu, which I feel like is a very uh, I at least drink it. and I see other people around here drink it. So I mean, based on that very small demographic, it seems like it's a well-to-do brand. So hopefully Celsius purchasing Alani Nu. Oh
Yeah.
no, didn't they have news about contaminated ingredients? Don't say that. Are you joking about that? Because if they actually did have contaminated ingredients, maybe it's a bad purchase.
Yeah, maybe that would not be good. But as far as the earnings that they, put out, they basically posted net sales of 332.2 million, earnings of 14 cents per share. So in the positive, analysts polled by FactSet had expected 328 million in net sales and 11 cents respectively. So they beat Wall Street's expectations. That's the big takeaway there. So um,
Right.
Celsius is a very interesting company due to the positive earnings. Also, if you come over here to Fintel, which is a great website, coming back to the whole topic of short interest, right? Basically, when we're talking about stocks that have a high short interest, generally speaking, anything above 10% short is considered high. And as of Friday, the short interest for Celsius, according to Fintel, is 25, just over 25%, 25.10% short. So almost double that. So it's very high. Short interest ratio 1.48 days to cover, with a total short interest of just over 37 million shares. So a lot, a lot, a lot.
Yeah.
And so I also find this interesting, Ethan. If you look over here, the off exchange short volume being at 13 million shares, off exchange short volume ratio 41%. So these are basically dark pools, which is a whole nother topic. But basically, large institutions, if they want to purchase a crap ton of shares, they don't have to use the exchange that Ethan and I use and that you use. They can use something called dark pools. So if you take all that into account, you're looking at a stock that is very, very highly shorted. Um,
Yeah.
so this is the daily chart for Celsius as of right now. If we look at the last year of trading, it had a high of $99.62 back in March of last year. And the shorts have been winning for the most part, since about May, when it was right around that 90 level. It's come all the way down into a 52-week low of $21.10 in early February. But as you can tell here, the volume on this thing over the past week has skyrocketed,
Yeah.
skyrocketed. And I just want to drill down into a little bit lower of a time frame here. Let's take a look at a 30-day 1 hour chart. So this was Thursday after the bell. We had the positive earnings, of course, and then coming into Friday, it kind of gave back a little bit of that, but it's still holding up pretty strong at $32. So this is a very, very juicy play. This is exactly what I would be looking for as a trader, something with a positive news catalyst, something with a high short interest, and something that, according to the chart, has room to run. If we just quickly go back to the daily chart, the 200-day moving average is $41.59. And so I'm going to be, looking for this to, at the very least, gain about $8 more, $9 more before I think there's going to be a pullback. But yeah, this is a very interesting setup. What do you think?
I like it. And to address contaminated ingredients, I did a quick little look up here. There was cyanide content claims that the levels of cyanide were harmful due to the presence of cyanocobalamin, which is a form of vitamin B12. If you drink any sort of energy drink, you're probably going to see it in the ingredient list. Um, but that was bunk. The amount was well within safe consumption limits. And then that was specifically for Celsius. Both Celsius and Alani Nu had some regulatory actions in Canada because they had some non-compliance with caffeine content limits and labeling requirements. Specifically, they did not have bilingual labeling. So, je suis omelette du fromage, uh, omelette du fromage après pour la publicité. They didn't have anything like that. So they didn't toss any French in there. Didn't think you'd be getting some Japanese and some French on this episode tonight, did you? Yeah.
Always in for surprises. That's what we got here at Stonkcast.
Yeah. And
Um,
Mr. West said anyone not complying with Canada is okay in my book. So you and Ryan Cohen are on the same page there. But that is a good transition to what we're going to open up for the floor here. Is we're going to have a paper money or a paper account where we are doing some paper trading. That way, we don't blow our own accounts up and blow them out the water. Now, we might be a little bitter if we blow them to the moon and that we didn't have the
Probably.
capital to actually capitalize on that. But um, thank you, Ben. Ben said, big fans of you two hotties. 100%.
Oh,
Thank you.
wow. Thank you, Ben. What a compliment.
But
Love that guy.
we have a paper trading account. I've already loaded it in with just a little bit of an Nvidia play, but
Well, real quick,
it's
Ethan, do you want to explain for those who don't know what a paper trading account is?
uh, that's such a great idea. Yeah, of course. So a paper trading account is simply a account where you can trade fake dollar bills. So it's monopoly money. It doesn't matter. It follows the same trends as the market. So your tickers, your option chains, everything is going to mimic what the market is doing. Your open and close times, aftermarket, all that is the same. The only thing that is different is that you've got fake money deposited into the account so that you can test out some strategies. You can do back testing if you want. Well, that's more for like algorithmic trading, but it's just a safe account where you can test out some plays and kind of
It's
uh, uh, what's the word that I'm looking for? Not grind your teeth. Maybe just sink your teeth into it.
Yeah, it's a good way to, like Ethan said, to test out strategies. That way you're not just blowing your money on a strategy that you might have in the market and not know if it
Cut
works
your
or not.
yeah.
Um, uh, it's definitely helpful. Test out strategies, and then you can implement that with a real account with real money once you've actually got a track record of, hey, the strategy works. I'm positive on it. It's a good way to you know um, test out some stuff. So
Yeah. And I've got a short term NVIDIA call, but a long term NVIDIA put because I do not believe that NVIDIA will continue to sustain itself. I think it's going to correct itself in the long term. But in the short term, I think that the AI hype is still, giving it some momentum and whatnot. And then Celsius, what are you looking at for Celsius? What would you?
yeah. So I think with Celsius, yeah, let's take a look here at the options chain. So I think what we should do with Celsius is this. So right now, I think given the push up it had on Friday, I think it
Mhm.
is in the short term a bit overbought. The RSI, the momentum indicator, is definitely hot right now and needs to cool off. So I wouldn't be shocked tomorrow, especially if the market is dragging, to see it, come off a little bit. But I think that we should look at something like, I want to say 2 months out,
Okay.
maybe like 45 days out, something like that. I'm looking at calls though. I think there is a ton of short interest there, obviously, as we just saw, and I don't believe everybody covered off of that good earnings report on Thursday, right? So there's a lot of shorts still out there, and they're going to be feeling the pressure if this thing keeps going up. And we've seen from Swaggy Stock's website, the social sentiment is high. There's a lot of eyes on it, so it's going to be actively traded. So I wouldn't be surprised to see some more bullish momentum for Celsius. So what do we got as far as maybe like 45 days out, something like that?
Uh,
April. I like April.
there's a 40 weekly on April 4th, and then 53 days from now on April 17th, which I honestly, this is a gap in my knowledge. I don't know what weeklies are. I think, is it a limited bid? Is it a limited strike price on weeklies? Do you know?
Um, well, so weeklies are usually only used in super liquid option chains like SPY, Q, stuff like that, because you can buy options that expire Monday, Tuesday, when any day of the week. So that's why they typically list weeklies in those options chains. As far as I know, you can't buy any contracts on Celsius that expire any day but Friday. So by default, everything would be a weekly anyways. So maybe it's them just throwing that in there. Kind of goes without saying they're all weeklies as far as I know though. So um
I did have a question in the chat. Balsamic Bunny asked, "Where does one paper trade?" The platform that we're currently using for paper trading is Thinkorswim. Thinkorswim is owned by Schwab. So
yes.
if you have an account with Schwab with their brokerage, you can trade or do paper trading with Thinkorswim. I also think that you can do it with Webull.
You can.
Um,
Yeah, you
okay,
can do it
cool.
with
So
Webull.
Webull, yeah,
To my knowledge, you cannot do it on Robinhood. I don't think I have a paper trading platform yet.
yeah,
Um,
they do.
but the two that I'm aware of is, yeah, Thinkorswim, Webull. You can also paper trade on Trading View. That's another one. So, you know, you can pick any of those, but you could just Google paper trade account, and I'm sure you'd get a list of a lot of possibilities.
So what are we doing here? Do you want to do April 4th or
So
the
yeah,
17th? What's
let's
your
let's do the 17th. Let's give ourselves some time. What is that, 53 days?
yeah.
I like that. So the reason that I'm doing April is because I don't want to run the risk of getting theta decay, which is the time value on options. If you do something too close to expiration and it doesn't move, you will lose value in your
You'll lose
contract.
cents to the dollar, right?
Yep. So I don't want to risk that. I want to give myself some time before I have to worry about theta in case it doesn't move at first. So yeah, let's do April 17th. Let's take a look at the 40. Yeah, let's take a look at the 40 strike. What's that?
The 40 is at $1.31 bid, $1.41 ask.
Okay. Yeah, so the midpoint there is going to be about 135. And remember, with options, people, you have to multiply by 100. So it doesn't cost $131, or excuse me, it doesn't cost $1.31. It would be $131 on the bid there. So yeah, it's going to be roughly, depending upon what open looks like tomorrow, we're going to be paying, probably about $135, $140 per contract. And one of the important things to also highlight with a paper trading account, really with any account, whether it's live or not, risk management and position sizing are very, very important. If you do not have discipline in trading or investing, you will not succeed period. So one of the things that Ethan and I are going to prioritize with this account, risk management and position sizing. And the way that, we're going to do that is we're going to make sure that any one position in this portfolio is not larger than 10% of the total portfolio. And on this particular, position, we're going to risk, 2%. So if we lose 2% of our total, account value, then we're going to sell it. So it's definitely important to stick to really good risk management. Position sizing is the only way to succeed in the market. So what is our fund money balance, Ethan?
200K.
200K. So if we were to take a position here, it can be no more than a total value of $20,000. I don't think we need to go a full 10% portfolio on this. I think we could probably just get away with a quarter of that. So a total position of Celsius here of about 5,000, I think, is what we should do. What do you think?
Yeah, I like it. I was trying to do profit on it. Um, so some brokerages aren't like Robinhood where they walk you through like this beautiful visualization of what your profit's going to be. So you kind of have to like
Yeah.
um, use third party tools, or you can do a basic formula. Um, so your profit is going to be, remember your order of operations in parentheses is going to be your stock price, which right now, after hours, it's $32.40 minus your strike price, which was 40. So um, that times 100 because each um, lot or each option contract is a lot of 100 um, underlying securities, pieces of
Yeah.
stock. How would you say that? But each one is a
Yeah.
lot of 100, right?
Each contract. So for example, when you're buying a call, you're buying the right, not the obligation, but the right to purchase that stock at that strike price. So for example, if we buy $40 calls on Celsius and the stock price skyrockets to, let's say, hypothetically $70, we have the right to purchase it still at that $40 strike price, even though the stock is well above that at 70. And for each contract that we purchase, we have the right to buy 100 shares at that $40 strike.
Yeah. And again, uh, I don't know if there's a best practice for determining, where to go on the bid ask spread. But if you look to the left of the strike price of 40, you can see the bid says a dollar 31 and then a dollar 41.
Yeah.
So I don't know. I guess it would depend on like how aggressive you're being. Would that be accurate?
I yeah, for a position like this, I would say we're just going to set it for a market order. So with the market, we're just going to buy it at whatever price it's trading at. If you were super conservative, then you would only put a limit order in for the bid price of $1.31 there. But we don't really care about that. We just want to get action on it.
Yeah.
And I think 2% of our account is $4,000. That's the most we can lose on any one position. So we should probably just buy $4,000 worth of Celsius $40 strikes. That way we know that if we lose it, we're only losing 2%. So we can just buy at the market tomorrow, is what I would say.
And we'll say price per option. We'll just split down the middle and say a dollar 36 cents for now. And
So we
so
can get
one
like,
contract will be $136, right?
yeah. So we'll probably be able to buy like 29, 30 contracts if I did the math right. That'd be about
Yeah.
4,000.
30 contracts, your
Yeah.
entry cost would be $4,080.
Boom. Go for it.
Um, so
So we're buying 30 contracts of Celsius April 17th, $40 strikes. We're adding that to the account, the Stonkcast account.
hold on. My wife just came into the room. Are you trying to confirm that this isn't real money?
Surprise, surprise.
Yeah, this is real money, honey. This is
This is real. This is real money, folks.
yeah. So, okay. Sorry.
Just kidding. It is not real. She had to
Okay.
double check there.
Yeah.
That makes sense. Um, yeah. So we're adding that to the Stonkcast
I,
account.
I lost
We're-
myself on the screen right here. Um,
So
by this
Celsius and Nvidia.
10, 29 at 40 limit. We want to put that at market, so it's just going to
Yep.
be whatever they decide to fill it at.
Yep.
Maybe my phone's covering it. No, I was looking to see. Maybe they like really depend on you to be like to know what you're doing, because I was looking for, um, like a because it's market. It's not okay. There it is. Um, so the
Boom.
cost for this will be roughly 3,900.
Yes.
Um, and that is indeed in my paper money account. It is not
Paper
my
money
real
account. It
account.
is not the real account.
So let's send it. We sent it.
Monopoly money is out there. Let's see what
It's out there.
Celsius does. We'll
We'll
keep you
see. We'll
updated.
see what happens. Celsius or bust.
Celsius or bust, people.
That's
Short
right.
squeeze to the moon, diamond hands, all the sayings, right? So yeah, so that's our new project here on Stonkcast. We're gonna continue to work on the paper trading count, try out different strategies, play along with us if you would like, and the challenge is going to be to see if we can 2x that account. That's the challenge. We'll see what we can do. So
That's right. And okay, next up, let's see. Can you hear that?
oh, I do. Sounds like a screeching owl. Is that a fax machine?
Oh my gosh. It's Michael Wilcox. He's faxing at this hour. He's, he's faxing
Michael,
at this hour.
we
Oh my
haven't heard
goodness.
from him in so
Michael,
long.
he just it's the field report. Okay, operation
Oh,
code name Phantom Liquidity. The Federal Reserve has deployed another strategic ambiguity maneuver.
oh
Jay
boy.
Powell, codenamed the Architect, he took stage this week issuing a carefully orchestrated blend of dovish reassurances and hawkish undertones. The market, drunk on some hopium,
Mm,
of early rate cuts. We all like hopium, right?
we
Except for
love
the
it.
hopium getting us. Uh, there's tiny shifts going on. He's not mentioning any March rate cuts. So, what's going on right now? The Fed's balance sheet movements suggest a silent backdoor bailout for the financial plumbing, but Powell won't say it outright. So, let's see what's going on here. Uh, he kept both hands on the podium. Michael, well, you are so detailed. He was restraining himself. No excessive gestures, so no panic. He did a
No
micro
panic.
pause before. Inflation is easing. This is classic Powell bluffing, says Michael. Listen, Michael follows Jerome Powell everywhere he goes. He knows his micro movements and his micro facial expressions.
No one knows him better.
No one knows him better. He gave a absence of data dependent phrase. This is critical. When he avoids his usual fallback of "we will remain data dependent," it means the
Mm,
decision is already made. So, what does this mean? For equities, the S&P 500 rallied into resistance driven by some AI stock euphoria, but volume is weak. This is a bull trap in the making. For your bonds, the 10-year yield ticked up slightly. It's an early sign that smart money isn't convinced by the pivot narrative. And as far as gold, it spiked on renewed fears of economic turbulence. Watch for breakout in gold if Powell pulls the liquidity plug too fast. Oh, Michael, our senior field agent out in Twin Cities, he gave us some operative actions. Scale into shorts on overextended tech stocks. Nvidia cannot go up forever, and the AI hype cycle is reaching its speculative apex. And then hedge into some long positions in gold and commodities. So if the Fed is forced to cut later in the year, the real inflation trade will ignite again. And then watch the repo markets closely. Signs of stress could mean emergency liquidity injections and a new covert QE cycle. QE is quantitative easing, and it's what it sounds like. It's very minimal easing in order to essentially prop the market up. So if Powell avoids committing to a March cut next week, volatility will surge. The VIX will be calling. And
Hmm.
then while retail is blindly YOLOing into calls, this is your exit signal. Watch for a controlled demolition of over-leveraged sectors before the Fed steps in again. So, hey, the game is rigged, but the signals are there. Stay sharp. Thank you
Mo-
so much.
wow,
Oh my goodness, Michael
Michael,
Wilcox. He
he's
is
doing great
amazing.
stuff for us out there in the Twin Cities, man. I really love that guy. I don't know how he stays warm, staying in the car. I mean, you got to run out of gas eventually, right?
Yeah, that's why he parks at the old 7-Eleven.
Just a
I
car and a fax machine and a big gulp. That's it.
we don't know what he hooks the fax machine up to, but he gets faxes to us at all hours of the day.
It's anyone's guess.
Yeah. I asked him for a dumbed down version so that I could tell, like, myself. Uh, he said, these are the points that you need to make note of. The Fed is playing mind games. Retail traders are falling for the bait. Tech stocks are overhyped. Gold is the backup plan. It's always been the backup plan. That's why there was did you see there was tons of gold that was being flown in from overseas, from like Europe whenever Elon Musk made a call to audit the Fed. He made the call to audit the Fed and to find out where's that money, where's that gold at that's that the Federal Reserve is holding on to. Um,
Wow.
March will be a reality check, and the smart money is already positioning. So, hedge funds and big players aren't buying into the hype; they're preparing for volatility. So, step into their
Yep.
shadow, into smart money's shadow, and hedge your bets right now. I would load up on commodities and gold, do some short dated puts on Nvidia and the overhyped tech, and go long on gold. So, hey, that's our Michael Wilcox minute.
Thank you,
Does Mike
Michael.
have an EV? No, Mike is 100% internal combustion, baby.
Oh yeah. He has no Cadillac converter.
No,
He's just going hard in the paint on that fuel.
yeah, but
Um
I think that's a perfect segue. Volatility is coming.
it is.
So tell us about VIX.
Yes,
We're
let's
not
talk.
talking about the VIX chest rub.
We're once again not talking about VIX chest rub. That is correct. So yeah, as Michael Wilcox so beautifully shared with us there, um, I think things are starting to look a little hairy in the markets. This, ladies and gentlemen, is once again our VIX chart, CBOE market volatility. Again, the way this is calculated, it's based off of near term expiration SPY um, options, right? Calls and puts for the next 30 days based off of how much buying and selling of 30-day expiration options are done. That's how we get the VIX reading. So if we take a look here at the last year on the VIX, I have some important levels kind of laid out here that I'm paying attention to. But the important thing to note here on a high level view is that the VIX, with the exception of this spike that we had back in August, has been relatively low, very low, actually. We've kind of been in this like range. Recently, we come down here, we kind of tap this like 14 area. If you look back into May and June of last year, we were as low as 12 at one point. VIX is low. Anytime that, VIX is below 20, the market is stable, it's bullish, things are going up. Everybody is kind of anticipating what's happening. Anytime VIX is above 20, a lot of fear, a lot of uncertainty on the part of market participants. And I think that if I had to guess, we are due for a correction. We are due for a bit of a bear market is really what it is. Now, I'm not a fortune teller. I don't know when it's going to happen, but there are certain indicators or certain things that we can look at, right? We can look at Michael Wilcox's report. We can look at the VIX. We can look at, oversold areas. So what I'm looking at on VIX, and we'll probably add this to our paper trading account next episode, but I want to buy calls on the VIX because I think over the next 6 to 8 months, we are going to see a spike in this. I don't know how high it's going to go, but I'm anticipating the market turning red, which would mean VIX would turn green. It's that simple. It's the inverse, right? And so, we're overdue. We're just really, really overdue. This is the past 3 years of VIX, and as you can tell, over the past 3 years, it's just kind of gone down, 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 down. We had the spike, like I mentioned, in June, but I think we're overdue to see some volatility here. So definitely something to pay attention to, and also something that is noteworthy. The financial sector for the market right now is, it's been going up, but I've been seeing a lot of news that certain components of it are starting to get a bit weak. Obviously, we had the sell off on Friday. But if the financials end up, going red, I don't know how many markets I can recall where, the market was able to be held up while financials were bearish. So again, nobody is a fortune teller, but there are very notable indicators, very notable newsworthy things that kind of signal the beginning of a turn of the tide, so to speak. We already talked about Warren Buffett and the fact that he's holding on to more cash than ever. That's a sign. The VIX kind of squeaking up on Friday. That's a sign. Um, you
When
know,
cash
uh,
is being held on to by the big money, it means that
Smart money.
they're
Yeah.
scared. They're scared to put it anywhere else, and they want to protect it.
Yeah. I wouldn't even be having this conversation right now if Warren Buffett was 90% in stocks. It wouldn't even be a conversation. But that's not the reality we live in. The reality is he's not putting his money out there. And there's a
Yeah,
reason. He's smart. He knows what he's doing. And I want to be smart. So I'm going to, pay attention to, what he's doing and take cues. So yeah, that's our VIX report. Definitely something to pay attention to this next week, and that kind of leads me into the economic week ahead, things to pay attention to. So basically, for this week ahead, we have some notable earnings coming out. One of them will impact for good or for bad our paper trading account position in Nvidia, but some big boys coming up here. We got Home Depot on Tuesday before the bell releasing their earnings. We got Lowe's on Wednesday, and then after the bell on Wednesday, Nvidia. And why this is so important, Nvidia is one of the larger companies in the market. This will also be the first earnings report post the DeepSeek news that came out. So it'll be interesting to see how that's impacted the business. Um, And if they come out with terrible earnings, it's going to be a drag on the market, adding more to that turn of the tide into a more bearish realm kind of environment potentially. But these are all the earnings coming up this week, things to pay attention to. I'm also keeping tabs on Fubo TV on Friday with that Disney news. We talked about that a few episodes back. But these are your earnings reports. And as far as any kind of economic reports and Fed speakers this week, not a ton going on for the week ahead, but there are a couple big things to pay attention to. We have initial jobless claims coming out on Thursday, 8:30 a.m. But on Friday, this could be huge. The PCE index report will come out at 8:30 a.m. The PCE is the Personal Consumption Expenditures Report. It's a measure of how much U.S. consumers pay for goods and services, and it is the Fed's preferred inflation gauge. That is very important to know. If this comes in hot, Daddy Powell might just have a change of mind, and he might end up thinking a little differently about pausing rate hikes and definitely on lowering them. And it might turn into an environment where he considers raising them again if they keep getting, hot reports. So PCE on Friday is huge. Definitely something to keep tabs on.
Yeah. I also saw new home sales on that list.
Yes.
I think on Wednesday is when it was, Tuesday or
Yep.
Wednesday.
New home sales Wednesday, 10 a.m. The forecast 674,000. Previous was 698,000. So it's dropped off. The medium forecast is lower than previous. So yes, good eye.
Yeah. And housing, if you don't know, housing is definitely one of the big first sectors that reacts to economic changes. So be interested to see what happens with that report and what that looks like. Um, yeah. But
Yeah,
hey, you got anything else?
I think that's it. We had a lot to unpack here. It's always fun. Just a reminder, if you are on YouTube, please like and subscribe. Helps us get in front of other people. You can find us on iTunes, Spotify, Amazon, wherever you listen to podcasts. Please like and follow. Supports the show, and we appreciate you all.
Yeah. So that's a wrap for this episode of Stonkcast. We covered Berkshire's latest moves this week, the Nvidia earnings setup, what we're going to be making off of Celsius's $1.8 billion shakeup, and what's
Boom.
ahead in the market. Whether you're riding the volatility or playing the long game, remember, plan the trade and trade the plan. Stay sharp, stay disciplined, and we'll see you next time. And
Good night.
again, if you enjoyed the episode, hit that like button, subscribe, and let us know in the comments what plays you're watching this week and what you're going to be doing with your account. See you on the next one.